Welcome back to my channel. So today's topic is the other block that can fail you. These are the guide on how to know a quality and a valid and a strong order block. If you have not been to my channel before, I'd like to say hi and welcome back to my channel. And if you have been following my channel, I hope you're also gaining value as you're on this channel enjoying some amazing content. Now, the first rule is the order block leads to a break of structure or a change of character. So, for you to know a valid order block, the order block has to have a change of character or what? A change of or a break of structure. The second one is the other block should have a form of imbalance or a fair value gap. Imbalance can also be liquidity void, but it should have a fair value gap or imbalance. We all know the type of imbalances that you're looking for before the other block. The other block also should not be mitigated. It should be unmitigated, meaning order has not been taken in that zone, order is still available for us to go and take in that zone. I'm going to show you an example on the chart so you can understand what I'm talking about. Now, if you look at this scenario here, we have what? We have a break of structure here, which led what? Which led the market to create a structure. That's the first rule. You can see that the market created what? A break of structure. The second rule states that the other block should have what? An imbalance or a fair value gap. Now, if you look at this other block, this is the last candle, the last bullish candle before the impulse move was being created. And what do we see here? We see a fair value gap. Can you see that here, right? We see a fair value gap here which markets created as a form of what? A form of order that market has come and taken. Now, a fair value gap has three, is a three candle sequence. One, two, three. Three candle sequence. One, two, three. Three candle sequence. This is also a fair value gap here. One, two, three. Three candle sequence. Fair value gap also here too. But if you're having issue with structure, you can come to your indicator and put in smart money by Lux Algo. This will help you to know the way to mark your structure and way to also see some fair value gaps around the chart. Now, this is how you know your fair value gap is a three candle sequence. You count the candle sequence. Now we are looking for, I'll call it inefficiency, fair value gap, or I'll call it unhealthy price action. This is what we call healthy price action. When the week there is no order in that zone, we call it a healthy price action. But when it's an unhealthy price action, is when we see our fair value gap that market is going to go and fill up. Now the third rule is the other block has not been mitigated. As you can see here, if you mark this last candle here, you would realize that the other block has not been mitigated yet. Can you see that? So our confluences has been hit already. We have the other block which has imbalance. It created a break of structure and it has not been mitigated yet. And if you look at this very well, if for those that trade only other block, if you play it round, you can see markets got to that other block. Can you see it? And reacted there, signifying to us that that other block is a very strong other block. But not to enter this trade so directly, you can go to your lower time frame and refine it 5 minutes, 3 minutes, 1 minute for a more risk to reward ratio. Now, if you go around the chart now, I have another good example for you here. This is another beautiful example for you here. What do I have here? I have a break of structure inside here. Markets broke structure here, which created the impulse move. That's our first rule, number one. It can be a change of character. It depends on you. It can be a shift in market structure. But market created a BOS here. What do we see here? I see my fair value gap because it's a three candle sequence. One, two, three. Three candle sequence. One, two, three. Three candle sequence. So I see my fair value gap here, close to the what? The other block. It's an unhealthy price action which market has to come and fill in to make it a healthy price action. And what do I have here? The zone has not been mitigated yet. The other block has not been mitigated yet. And can you see that market is going to react there? Can you see we're taking as inducement liquidity? But normally I'll take this last candle here. I'll add this one as the week here. But this is the last candle that was being published before what the impulse move that created a break of structure. This would have been a form of inducement because why? It was a form of liquidity. Can you see it? If you go to a lower time frame, you see a liquidity that was created here, but you enter it directly. You wait for a form of refinement to enter this particular trade. Let me show you another good example again beside it. There was what? A break of structure here. What do I see here? I see a fair value gap here. Can you see that? I see a fair value gap here. Inside that zone, can you see it? And what do we have here? We have what? An order block. Can you see that? An order block which this market came in and reacted here, that created this under break of structure around here. So this is how we know the type of order blocks to trade and make it more easier for ourselves to get a good risk to reward if you can refine it. Don't forget to subscribe to my channel, ask your questions, send me an email or message me. I'll try my best to reply all messages I do receive. I try my best to reply all messages, and thank you so much for listening.